Good morning. May we ask you all to take your seats, please? We are about to commence. Please take your seats. Chairman, shareholders, directors, members of the media, ladies and gentlemen, good morning. Welcome to the annual general meeting for SYGNUS Credit Investments for the financial year for the firm ending June 2025. As a courtesy to our fellow shareholders and investors, we're going to ask all persons to kindly place their phones on silent. And from an admin point of view, the restrooms are out the doors here to the right and at the end of the corridor. So without further ado, let me welcome the chairman of SYGNUS Credit Investments, Mr. Linval Freeman, to call the meeting to order.
Thank you, David. Good morning, everyone. I usually say this is the day that the Lord has made. We're glad and we rejoice in it. All right. So my name is Linval Freeman, as was previously said, and I have the privilege of serving as the chairman of the board of SYGNUS Credit Investments Limited. We're going to refer to SYGNUS as SCI, or the company, as the case may be. It's my pleasure to welcome you to our 8th annual general meeting of the shareholders of FCI. I'm advised by the company secretary that in accordance with the company's Articles of Association, a quorum is present by proxy and in person. The meeting is therefore properly constituted, and I now declare the AGM meeting open. Apologies. I've been advised by the corporate secretary that there are no apologies for absence, and shall I just say also that our CEO would normally be here in person is traveling, so he will join virtually. I would like to acknowledge all the members who have joined us today, whether online or in person. Your presence signifies your dedication to our company, and we value your interest and support. Each year, we look forward to this opportunity to meet with you and to share SCI's achievements over the past year. Similar to the approach taken last year, the directors have agreed to host a hybrid meeting to ensure broad participation from our shareholders, offering the flexibility to attend either in person or virtually. The meeting is convened in St. Lucia, and we have a satellite location in Kingston, Jamaica, here at the AC Hotel, from which the proceedings of the AGM are being carried to you live, and shareholders can attend in person. Shareholders will be able to view the proceedings of the AGM, vote on resolution, and submit their comments and questions by logging on the e-platform being used to facilitate this AGM. The instructions to access the e-platform were provided in the shareholders advisory notice released on the Jamaica Stock Exchange website and on the various social media platforms. For our members joining us online, the registration link for accessing the AGM was circulated. Registration will remain open throughout the duration of the meeting, allowing individuals to register and be admitted at any time. The notice of meeting and the form of proxies were dispatched to all shareholders on record in accordance with the company's Articles of Association. If there is no objection, I propose that the notice of the meeting be taken as read. Before commencing today's meeting, I will give a very brief overview of the company. SCI is an international business company registered under the International Business Companies Act 1999 of St. Lucia, which is with its registered office located at 20 McCourt Street, Castries, St. Lucia. SCI is a specialty private credit investment company dedicated to providing non-traditional financing to medium-sized firms across the wider Caribbean region. Non-traditional forms of credit are more customized and flexible than traditional financing. Consequently, the company offers an alternative channel through which medium-sized firms, which are typically underserved by traditional forms of financing, can access capital to drive their expansion and growth. The company targets mostly portfolio companies operating across a broad range of sectors, including manufacturing, distribution, financial services, energy, real estate, transportation, infrastructure, and business services. These portfolio companies typically have revenues between $5 and $25 million US. By virtue of the shares being listed on the main market of the Jamaica Stock Exchange, the company is subject to all the laws applicable to issuers of securities in Jamaica and companies listed on the Jamaica Stock Exchange. I would now like to introduce directors of the company. Joining me today, we have Dr. Ike Johnson. To my left, Mr. Ian Williams, who's present here, and Mr. Damian Chin, who's also here. Online, we have Mr. Horace Masado, Ms. Hope Fisher, Mr. Peter Thompson, and we have Rory McNamara, the representative from our company secretary, MCI Incorporated, sitting in the St. Lucia office. Ms. Valerie Rapier, a representative from our company secretary, is also sitting in the St. Lucia office. The directors who are joining us virtually are able to fully participate in the meeting and to answer any questions that may be posed to them. Also in attendance are members of the company's investment managers, executive, and senior management team. So sitting at the podium, we have Mr. Jason Morris, the figures man, who is the Chief Investment Officer of SYGNUS Capital. We also have present Ms. Cyrilline Hudson, who is the Chief Legal Officer and Compliance Officer. Mr. David Cummins, who opened the meeting. Vice President and Head of Real Estate and Project Finance, Elizabeth James, who is sitting in the front there. Head of Wealth, Monique Anthony, who is our Chief Financial Officer. Yashi Hall, I'm not seeing Yashi, but she's somewhere around. And Yashi is the Head of Risk. Mr. Gregory Hines, I'm not seeing Gregory, but again, he's somewhere around. He's a VP, Asset-Backed Investment and Projects. Mr. Andrew Foreman, who will play a lead role in helping us to organize today, who is an AVP Legal Counsel. And there are several others here as well who I have not mentioned. And as indicated, Mr. Beres Gray, our CEO, and Gregory Samuels, Senior Vice President, are both traveling and will be joining us online. I'd also like to acknowledge the presence of our auditors from KPMG, Mr. Damian Reed, partner, and Danielle Sutherland. Is Danielle here? She'll be here at some point in time, okay. And I think we also have representatives from our registrar and transfer agent, Jamaica Central Securities Deposit. Can you hold up your hand if you're here? They're outside, okay. And on the outside, therefore, we have from that entity, Miss Tiffany Hall and Mr. This is like Giovanni Lynch. Members of the press, non-shareholders who may be also present, we welcome you, and who may be online as well. Throughout the meeting, I will refer to SYGNUS Credit Investment as the company, or SCI, as I previously indicated. You have been provided with a copy of the agenda, which set for today's proceedings. The agenda has been emailed to you and is in our annual report. Minutes of the meeting. The directors have confirmed that the minutes of the annual general meeting held on the 29th of January 2025, last year, are a true and correct record of that meeting. Copies of the minutes of the meeting are available for viewing on the company's website, on SYGNUS's website. The purpose of the annual general meeting is to receive and consider the annual financial report of the company for the financial year ended 30 June 2025, together with the auditor's report. The AGM is also to consider, and if thought fit, pass the respective resolutions duly set out in the notice to the annual general meeting dated the 5th day of November 2025 and duly signed by the company's secretaries. The company secretary has advised that proxies have been lodged by 54 shareholders, totaling 264.3 million ordinary shares and representing 45% of the ordinary issued capital of the company. Of the total proxies lodged, 19 shareholders holding 44.2 million shares and representing approximately 7.6% of ordinary issued shares have appointed the chairman, meaning me, as a proxy holder. For the remaining proxies, the proxy holder must attend the meeting in person or virtually to represent the member for whom you're holding the proxy. Those proxies will be deemed valid once the registrar has confirmed the attendance of the appointed proxy holder. Before we proceed with the formal business of the AGM, there are a few housekeeping matters I would like to bring to your attention by way of procedure. Voting. Before we move to adopt the resolution, I would like to outline the voting procedure. Casting a vote, persons who are here present. Shareholders attending in person will vote by a show of hands. Once we get the business section of the meeting and the voting of the resolution on the way, I will read each resolution and thereafter table for adoption. Shareholders will be asked to vote for the resolution via show of hands. Shareholders who are for the resolution will raise their hands, followed by the shareholders who are against the resolution. The scrutineer present, and usually our scrutineer is Mr. Andrew Foreman, will take account of the number of hands raised for and those also against the resolution, and this total will be added to the shareholders who voted virtually or via proxy. If a voter abstains, the vote will not be included in the count. Each shareholder or proxy present would have received either a red or a gold wristband. Yeah? When raising your hand to signify your vote, please ensure that you prominently show the wristband to ensure your vote is properly counted. For those who are attending virtually, once this resolution is put to the meeting, you should wait for your option to appear on screen or click Vote Now on your screen. Once the resolution is on screen, select For or Against option, then select Submit Vote at the bottom of the screen. You will then be asked to confirm your vote. Select Yes to confirm your vote or No if you want to change your vote. The company secretary has advised that a number of valid proxies have been received, as indicated earlier, in relation to these resolutions. In relation to proxies where the chairman has been appointed to vote, I will vote all proxies in accordance with the directions provided. Where undirected, where no instructions have been given, I will vote the undirected proxies in favor of the resolution. Okay? For the remaining proxies, the proxy holder must attend the meeting in person or virtually to represent the member. Those proxies will be deemed valid once the registrar has confirmed the attendance of the proxy holder. Proxy holders are permitted to cast their votes online in cases where the shareholder has not indicated their vote on the proxy form. Upon confirmation of the proxy holder's identity by the registrar, they will be granted permission to participate online. Mr. Andrew Foreman will act as scrutineer and will confirm the vote by show of hands, as well as the total votes for each resolution. Voting will close, and then I will announce the results. We will have 2 question and answer segments. The first segment will be prior to the adoption of the resolution number 1, the adoption of the audited financial statements. The investment manager will, will make a presentation on the company's performance and the outlook of the company. At the end of the presentation, we will have the first question and answer segment where shareholders will ask questions. We will allot 15 minutes to this segment to address your questions. Following the votes on the remaining resolutions, there will be a second question and answer segment where shareholders can ask questions relating to the company's business, those general questions. We have allotted another 15 minutes to this segment. And this question and answer segment will be moderated by Mr. David Cummins. For shareholders attending in person, if you wish to ask a question, you should indicate by show of hands. And one of our hosts will provide you with a microphone, and you will state your name and your status as a shareholder for the minutes. For the shareholders attending virtually, if you wish to ask a question, you should select the Q&A option that is located on your screen. Enter your question in the text box and select Send button located to the right of the text box. The question will be read aloud by one of our hosts so the other shareholders can hear the questions. Shareholders are asked to limit their questions to 2 to give others an opportunity to pose questions and to ensure the AGM's agenda can be completed on time. Questions and comments from the floor should pertain to the specific matter under consideration. With this background, we will now move to the formal business of the meeting as set forth in the notice of the meeting and the agenda. In order to conduct an orderly meeting, we give all shareholders an opportunity to participate. We'll follow the agenda as outlined. I will now present the formal segment of the meeting accordingly. We will take the remaining resolution in the order as outlined in the notice. So the first resolution is really the audited financial statements. And the first resolution is in accordance with Article 190 of the Company's Amended and Restated Articles of Association. The company is obliged to lay before the meeting the audited financial statements together with the reports of the directors and auditors, which are contained in the company's annual report for the year ended 30 June 2025. The audited accounts were circulated and are before the meeting for discussions, right? Before we take the resolution though, I will invite KPMG and our investment manager to make presentations and the auditor's reports and the company's performance respectively. So I'll ask Damien, or your representative, to come forward and make a presentation on the audited financial statements. Thereafter, we'll take.
Morning, everyone. Thanks, Mr. Chair. And I'll try to be brief today. Yeah. So, as some of you may be aware, SCI is a company that is registered and incorporated in St. Lucia. As such, it's not a standard requirement, unlike our Jamaica entities, to read the full auditor's report. But I will read the main conclusions and hand over back to the chair. So I'll ask you to join me on page 48, and I'll start. Independent Auditor's Report to the members of SYGNUS Credit Investments Limited. Opinion. We have audited the financial statements of SYGNUS Credit Investments Limited, the company, comprising the separate financial statements of the company and the consolidated financial statements of the company and its subsidiaries, collectively the group, as set out on pages 55 to 125, which comprise the group's and company's statements of financial position as at June 30, 2025, the group's and company's statements of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising material accounting policies and other explanatory information. In our opinion, the accompanying consolidated and separate financial statements presented fairly in all material respects the financial position of the group and the company as at June 30, 2025, and the group's and company's financial performance, and the group's and company's cash flows for the year then ended in accordance with IFRS accounting standards as issued by the International Accounting Standards Board, IFRS accounting standards. In closing, the engagement partner on the audit resulting in this independent auditor's report is Damian D. Reed, KPMG Chartered Accountants, Grasselet, St. Lucia, August 29, 2025. Thank you. Chair.
Thank you, Damian. So that was a clean audit report. That's what you say? Clean audit report. So SCI is in good business. All right. So can I now invite Jason to the podium to just give some highlights of our performance for last year?
Morning, everyone. Happy 2026. And hope your families who would have been affected or personally by Melissa in the western part of the island are doing okay. All right, so jumping right into it. Just to create a kind of a background to SCI's performance during the year. Just 6 main items. The first one being in terms of SCI's core revenue strength. The company would have generated, for the first time in its history, would have exceeded $15 million in total investment income, coming out to 15.39 million. So, you can clap for that. Secondly, second point I want to raise here is that similar to last year, the performance was mainly driven by the performance of the investment that SCI did in Puerto Rico. And the Puerto Rico company would have generated in the 2 financial years since the restructuring exercise that would have taken place after the acquisition, 8.85 million in cumulative net profit, which is more than all of the net profit the company would have generated in its first 18 years or so in existence. And the return to SCI from making that investment, as you can see, 17.7%, so it's pretty high for our private credit investment. So, that strategic decision to go into a new market has started to pay dividends. Fourth point is that from a deployment perspective, overall the platform generated 87.73 million in deployment, which is down, I would say, substantially from the previous year, 140.12 million. This was primarily due to a number of large transactions that were in train but weren't executed during the course of the financial year, and we will see some of those being executed in the current financial year that we're in. So we're not really worried about the quote-unquote fall off in the deployment. In terms of dividends, 3.2 million US was distributed to shareholders, which is the highest dividend over a 12-month period that SCI has ever paid to shareholders. And that, by the way, is the 14th consecutive quarterly dividend, semi-annual dividend, that SCI would have been distributing to shareholders. So whether it's, COVID or whatever other economic conditions, SCI has strived to maintain consistency in terms of paying dividends. I know that last year there were some shareholders who wanted to see higher dividends. So clap the 3.2 million. So far, final point, in terms of risk management, so far SCI has been fortunate to only crystallize at an annualized basis 0.2% in losses. So, that's pretty decent management of our pretty good stewardship of shareholders' capital by ensuring that we don't lose a lot of money while trying to make money. All right, so that's the backdrop. So jumping into the actual performance, financial performance during the year, I spoke about the 15.39 million top line revenue, which was up 52.4% versus the 10.1 million in previous year. Net investment income, which is the number that you get after stripping out operating expenses, came in at 10.02 million, up 89.6% versus the 5.28 million previous year. And as I said before, majority of this was being driven by the performance of the investment in Puerto Rico. And I have another slide where I'm going to explain how the Puerto Rico is accounted for in the financial statements. Despite those exceptional top-line numbers, net profit came out less than expected at 4.28 million, down 29%. And this was driven primarily by two things. One, we took the decision to early recognize higher impairment allowances for one portfolio company that presented a restructuring plan that was going through the process of being restructured. And even though that wasn't completed during the financial year, we decided to take the impairment charge on that upfront. And so that took us down because for the 9-month period, we were like 7, almost 8 million run rate in net profit. So that took us down to 4.28 million. And I'll explain a little bit more as we go through. So earnings per share ended up at 0.74 US cents versus 1.03 US cents in the previous years. And I spoke about the dividends before. The 3.2 million US record dividends from a dividend per share perspective came out to 0.55 US cents or 0.0055 US dollars. This slide is a bit busy and a little bit complicated, but it's necessary for me to go through it so that everybody understands what it is that they are invested in. So at the top, on the left-hand side, the first column, you have SCI, and you see the 6.322 million, which is the figure that is reported in SCI's income statement, which I showed on the previous slide, from the Puerto Rico business. But we're going to read this chart from the bottom up. So at the bottom of the chart is Accrescent Financial LLC, and that's the company that was acquired in Puerto Rico. And as you can see, that company would have generated 4.67 million in net profit for the financial year ended June 2025, compared to 4.18 million in the previous financial year. So the second column gives you the current financial year, and the third column gives you the previous financial year. So you can compare what is happening in one financial year versus the other, right? So if you move up one row and look at SYGNUS Credit Investments Puerto Rico Fund, or SCI PRF, that's a holding company that owns 100% of the shares of Accrescent Financial LLC. So effectively, since it's a wholly owned subsidiary, there shouldn't be a lot of changes between the net profit from Accrescent Financial LLC to SCI PRF. Of course, SCI PRF has a few things in it. So from time to time, the P&L number might move up or down depending on whether or not there are certain operating expenses that come to bear, etc. So the key thing is that to move from SCI PRF to another holding company, which is SYGNUS Credit Investments Puerto Rico Inc., SCI PRI, the consolidation stops and we have to do a fair valuation of that net profit figure. So the way I wanted to think about this is effectively we have a company that is generating $100 in net profit, and if tomorrow somebody were to come to us and say, I want to buy that company, the question is, how would you wouldn't be selling the company just based on the net profit figure, right? You would have to do some kind of valuation. Not exactly, but that's how I wanted to think about it. So the $4.26 million in net profit that the holding company generated would have been reflected as $6.32 million passing through as a value, net benefit to SCI and its shareholders in 2025. And if you go to the previous financial year, June 2024, you would have seen that the same company generated $3.69 million in net profit, but the value that came across, or the net benefit that came across the SCI was only $1.3 million. So the value will fluctuate because we have to value it based on, other publicly listed companies in a similar type of business and apply certain metrics to that to get a multiple. And so from time to time, the multiple might fluctuate. So the 6.32 million in 2025 simply reflected better market multiples versus the previous year when we suffered, when the 3.69 million resulted in only 1.3 million, right? So I want to make that clear so that as we go through time, because this is a forever statistic, meaning every financial year that we come here, there's going to be a number that is reflected in SCI's income statement from the Puerto Rico business. Okay, so this other slide is just to give some more context to the Puerto Rico business. So acquisition was done in February 2022, about 95.58% or thereabouts. And the year end for the Puerto Rico business was December. So Dr. Johnson and his great team in Puerto Rico had to do a reorganization, which took about a year and a half or so, which was concluded on July 1, 2023. So from July 1, 2023, the Puerto Rico business financial year end matches that of SCI's year end, which is June, right? But as you can see, in the 12-month period right after we finished the acquisition, the net profit figure was just above $500,000 US. And you can see that at the end of June 2023, that moved to $733,000. That was before the reorganization. So subsequent to the reorganization, July 1, 2023 forward, you can see where the reorganization has resulted in a scaling of the business substantially, where the run rate of net profit, call it an average $650K, has now transitioned to where it was at the end of June 2025, which is $4.7 million. And this net profit run rate figure, just like I said last year, will continue to scale because the business is operating in $100 billion economy, which is bigger than all of the Caribbean territories that SCI has deployed capital into combined. And so as that business grows, the net profit figure that the business will generate, we expect that to increase, and the financial benefit that filters through the SCI we also expect to increase. And so that shouldn't come as a surprise in future periods. And by the way, one important thing to reflect on is that those net profit figures, what's going on? Those net profit figures that I was showing for the Puerto Rico business, given the steady state that the business has reached, a decision was made at the Puerto Rico board where the dividend policy for the Puerto Rico business was established and agreed on and signed off on, and the dividends flowing from SCI Puerto Rico would expect to start flowing in financial year 2026. And financial year 2026 started on July 1, 2025. So from July 1, 2025 through to June 30, 2026 is the financial year 2026. And I speak more to that on the next earnings call. Okay, so this is just a chart of the history of the dividends that SCI has paid. As you can see, 18.26 million or 30% of the 60 million, 60 in share capital that you, the shareholders, would have put into the business. So consistently just trying to live up to our promises. This slide is just showing you efficiency ratio, which means for every dollar of revenue that's generated, how much of that revenue is going out into operating expenses. And you can see that we promised to keep this below 40%, and by and large, we have kept it below 40%, and in the just concluded financial year, it was below the threshold target. Similarly, management expense ratio, which is taking operating expenses as a percentage of the total assets under management. Again, you want to keep that figure below a particular threshold. We promise shareholders to keep it below 2.85%, which means that we are not utilizing a lot of money in expenses out of the total assets of the company, which means we have more money left to reinvest in the business or pay dividends or do an acquisition or do whatever. So you can see that we have done a decent job at that. This is shareholders' equity, which ended the year at 73.17 million versus 72.1 million in previous year. And you can see that we have had a steady increase in shareholders' equity since being a publicly listed company in June 2018, when we had 36.6 million. So we have effectively doubled that through a combination of additional capital raises of equity, as well as increased retained earnings through via net profits. And the next slide is showing you the total assets of the balance sheet of the business. So SCI would have eclipsed $200 million during the course at the end of the financial year 2025. And you can see where the company started in June, well, ended in June 2018, its first year as a publicly listed company, which was, now we can say it was a measly 37 million. This is just some balance sheet KPIs. Very important for shareholders. We are in, from time to time, economies will go through different challenges. Sometimes we'll have high growth, medium growth, or you might go to recession or bad circumstances. And SCI as a company was structured to always be a lowly levered business, meaning the amount of assets on the balance sheet should not be substantially outstripped by the amount of debt that is being borrowed. So if you borrow $100, so we shouldn't be borrowing like $500 and only have, not enough assets to cover it. So effectively, we set ourselves a threshold limit of no more than 2 times net debt to equity. And if you compare this to like banks, etc., that have 8, 9, 10 times net debt to equity, you can see that is a very low leverage business. And why this is important, no matter the economic circumstance or challenge, it means that SCI has a very strong ability to navigate difficult economic periods, which is why we would have navigated through COVID, etc., without much challenge, because we are not employing a lot of debt on the balance sheet. Next 2 slides is just to give you a quick overview of the financial performance subsequent to the end of the financial year. This was Q1 ended September 2025. As you can see, total investment income was up 3.1% to a new record 5.25 million. Net investment income up 4.5% to 4.01 million. But important in those two statistics is that net interest income grew substantially, up 37.9%, and the Puerto Rico business would have had a smaller gain of 1.91 million versus 2.69 million the previous year. And I would have explained on the previous slide that you can have fluctuations in the valuation and therefore the value that flows through from the Puerto Rico business, simply because we have to use market multiples. So if at the end of the quarter the market is down, it means that the valuation and therefore the value flowing through the SCI can be down, and vice versa, right? So we don't really control that. What we control is just the raw amount of net profit that the company generates, and then how much dividends that the company can then pay back to SCI, which is always the proof in the pudding, so to speak. Net profit was down 35.5% to 3.18 million versus 4.92 million for Q1 in the previous year. And this was because in the previous year, what we had was, at that time, there were two things that happened. We had a huge fair value gain because that was a quarter when interest rates were aggressively being reduced, and therefore the market metrics used to value the Puerto Rico asset and all the assets on SCI's balance sheet just went through the roof. We don't control valuation, we have to use the market information. And so we had a huge run-up in valuation, and at that time, on the earnings call, I had said that we shouldn't pay too much attention to these fair value because they are very volatile and can reverse, and that's exactly what happened during the course of last year. And so that's the reason why this net profit relative to last year is down 3.18 million primarily. Earnings per share 0.55 US cents versus 0.85, and dividends per share 0.0017. Now, Q1 dividends of 0.0017 was down versus 0.0028 last year, and the reason why we paid effectively $1 million US in dividends versus the 1.6 million in the previous year was because of what I told you before. We had a company that's going through restructuring, and we probably have more companies that will have to restructure given the effect of Melissa. And so out of an abundance of caution and prudence, we decided to reduce the dividends, watch and see how everything plays out, and then we can always normalize the dividend thereafter. Despite that, the return on average equity for the Q1 net profit figure was a very healthy 16.7%, above our 10% threshold target. This is just a quick synopsis of activity during the Q1. Total portfolio companies almost 200 million US. Number of portfolio companies 39 versus 37. New investment commitments during the quarter 4.1 versus 6.3 million. The yield on the portfolio 15% versus 15.3 previously. Average tenor still pretty short at 1.5, and then dry powder 10.53 million. Key note here is that at the end of this quarter, we would have exited roughly 19 million US dollars from maturing assets. And so that 19 million primarily was held in cash because I wouldn't have had enough time to redeploy all of that $90 million of cash in new investments, and hence why the total portfolio value would have declined relative to the end of the financial year. Of course, subsequent to the end of the quarter, we would have deployed out that cash, right? So I just want to highlight that. And then final slide, just where are we headed? Accrescent is going to continue to grow and grow substantially. We expect that business to scale, given the return that we are generating on the business. And we're generating a much higher rate of return on the Puerto Rico business than is being generated in SCI proper itself. So it makes sense to continue supporting and deploying capital into that business and helping to expand. Dividend distribution from that business into SCI as I said before, semi-annually on a go-forward basis. And of course, that business has $100 million in credit line, and actively expanding that credit line, perhaps, by 40-50% over the course of the next 12 to 18 months. At the same time, exploring other funding mechanisms, as well as looking at market expansion. And of course, once these things come to fruition, we will share as appropriate. Second thing is in terms of strategic growth path, the 1 billion that we want to be involved in, we are well on our way, over 500 million. Core revenues, we have a target to keep that above 12.5 million. For the last financial year, we did 15, which was above our expectations. For this financial year, Q1, we're at 5.25 million. So if you kind of annualize or normalize that run rate, you have 4 quarters in a year. So if we are able to maintain that run rate, obviously we would beat that threshold level. ROE needs to be above 10%. We were at 16.7% for Q1, and hopefully we can maintain that. EPS, we need to grow that at 20% per annum. We didn't meet that at the last financial year, and we wouldn't have met that either in Q1, so that's a work in progress. Maintain a minimum 5% dividend yield on the APO price. Would have met that at the end of the last financial year. For Q1, we would be a little bit below that, but as I stated before, based on the long-term trajectory and the plans that we have in place, we're not worried about maintaining this over the medium term. And then every year trying to get in and around, have a target of getting to a steady state of raising 100 million in dry powder for the platform each and every year. And I know that I've been coming here every AGM and saying we're working on international partnerships. And I'm happy to say that within days or maximum weeks, we will have the first such facility finally closed. I think we are signing those documentation now. So we'll say more about that at the appropriate time. We're also reviewing a draft term sheet from another international investment partner with the intention to move that fast. And then we're exploring a third international partnership. So finally, this item is moving. New business partnership. I think last time I came here, we said that this was a work in progress. And what I can confidently say, as of today, that the business license that we were pursuing was approved, and we have the business license in our hand. And therefore, what we are doing now is moving to execute. And the execution of this is also with an international financing partner. And the fourth thing, which cannot be ignored, given the environment that we're in, is to manage portfolio risk. Of course, about 30% of the portfolio is exposed to Jamaica, and in the western part of the island would have been impacted severely by Hurricane Melissa. And we would have shared on the Q1 earnings call that about, I don't remember, 12 point something percent of the overall portfolio was impacted. I think that number might be updated slightly when we present Q2 results, but we are managing those exposures and making provisions for those, helping those clients to recover to normalcy. So we have to ensure that we manage portfolio risk as we always do, but I wanted to put this out there given that Jamaica is a substantial part of SAI's portfolio, and we know that many companies would have gotten hurt by Melissa, as well as individuals. And then the final thing is share buyback. I know that over the last 12 months, we did not buy back any shares based on the circumstances where we were managing certain risk. However, in this current financial year, I won't say much other than we expect that some amount of activity will occur. Thank you very much.
Thank you, Jason. We're now on to the question and answer segment. David, can you take the mic and chair that function, that segment for us?
Thank you, Chairman. We will now take questions both from the floor and online. Just asking everyone to kindly respect the guidelines given by the chairman at the front, a limit of 2 questions each. And let's First of all, we have a question on the floor. Once you have come to the microphone, please give us your name, and if you're media, also give us that context. Please go ahead with the question, sir.
The first one, I have to big up Mr. Livingston, young shareholder. I have to big up Mr. What's his name again? The gentleman, big up all of the board director, everybody, but the gentleman we just talk a while ago.
His name is Mr. Jason Morris.
Yeah, Mr. Jason Morris. A big up, reason why I big up, I like the talk chemical was, in spite of the hurricane, for manage the portfolio. Yeah, big up for that, yeah? Yeah, all right. You can turn to page, no, the next one. The 15.3 million. A while ago, it says SYGNUS Credit and Jamaica are the overall portfolio we have Puerto Rico. No, we're just on the visual. Overall. Well, yeah.
Well, first, I want to big you back up, so big up yourself as well, right?
Yeah.
So the 15 point whatever million is actually SYGNUS Credit Investments, the group, entire company.
Yeah. When you the tax out it, how much you have left? Come is that they call it. Yeah. Get a little explanation of that.
Yeah, so I think the number that we presented was 4.38 million in net profits. I can go to it.
Yeah.
So when our taxation was not can you bring back up this? Okay, let me very quickly get back to it, right? So net profit was 4.38 million, if memory serves me right.
You know, composite.
4.28 million.
Oh, 4.2. All right, me make some of this, come on.
Yeah, man, no problem.
Do we have any online questions? Okay, we have another question.
Yeah, Robert March is the name, shareholder. The investments you're making, you're not supposed to call the name of the companies, right? But what type of business are you? Can you get a pie chart of the type of business they're invested in? Tourism, product manufacturing, hospitality, a pie chart of percentages of the business that SYGNUS is invested in?
It's a good question, right? We actually have a pie chart that we normally show, but because we wanted to keep the presentation kind of short, we have stopped showing it. But if you turn to page 26 and 27 in the annual report, 26 and 27 in the annual report, you will see first from a regional perspective what different countries we're invested in, and then the different industries. And you can see that we are in infrastructure, financial services, construction, hospitality, manufacturing, telecommunication services, energy storage, healthcare. We have overall portfolio of about 22 different industries in which we are invested in. But SCI itself is invested in about, 8 different industries. But when you combine it with the Puerto Rico portfolio allocation, is about 23 different industries.
I say infrastructure is the biggest. What kind of infrastructure? Roadworks, lighting, what kind of infrastructure?
So we do have roadworks, etc., but the large figure there is representative of oil storage infrastructure.
Oil storage?
Yes.
What kind of oil storage you're talking about?
Just like what it said. Basically, very large tanks.
The minister said he didn't find oil as yet.
Well, remember that SCI, as I said before, on page 26, you can see that we are invested across 8 different Caribbean territories. So that doesn't have anything to do, it doesn't necessarily mean that all of it is Jamaica or it's either in Jamaica.
Guyana, right?
No, it's not Guyana.
Venezuela.
We don't invest in Venezuela. It's not an investable asset at the moment.
So you won't say where.
Well, I mean, SSS Islands, you see SSS Islands, which is 6.3%. Yeah. That's one. And we do have also Jamaican exposure, but that's the largest.
Lucia, the island.
St. Eustatius, Saba, and what the last part? I don't remember what the last S stands for. Yeah.
Good morning. I'm Douglas Wilson, shareholder. Just have two comments really. One is a question. In terms of corporate social responsibility, was the company able to do anything in terms of assisting the victims of Melissa? That's one. And the second one is more like an observation. If I'm reading the report correctly, saying that the investment manager has 0 shares in the company, I find that most incongruous, really. So just want some clarification on that. Right.
What's again?
So let me take the last one first. So, good observation and good question, but it's not true, right? The investment manager actually has investment in SCI, but if I back up and explain to you, so SYGNUS Capital Limited, which is the investment manager, that's a Jamaican company that's regulated by the FSC. And SYGNUS Capital, that company is actually owned by SYGNUS Capital Group, which is a different company. That's where the shareholders of SYGNUS itself reside. And that entity actually owns shares in SCI. The reason why the manager itself, why we chose to, and initially, the reason why we chose to do it that way is because somebody else can have an opposite opinion to you and say that because the manager owns shares in the business, there's a conflict of interest directly, right? And so to ensure that there are no conflict of interest issues, the corporate body that actually owns the shares is deliberately different from the corporate entity that is doing the management. So that's the reason why it's not reflected like that. But yes, we personally and individually, or through different vehicles, have exposure in SCI. Now with regard to the yeah. With regard to the first question on corporate social responsibility, did you ask about Puerto Rico business or you ask about SYGNUS Credit Investment itself? Yeah. I mean, I'll let David answer that question.
Corporate social responsibility in terms of our response to Hurricane Melissa has been significant. The company itself, obviously, from an individual basis, as you would imagine, some members of the team were impacted and their families, and clearly there was response in that regard. From SYGNUS Group itself, we put together a fund to assist persons, and we also invited some of our partners and investors to contribute towards that fund. And essentially what we did was a strategy that looked at a phased support of the response. So there was an immediate response in terms of relief supplies, and we partnered with certain groups in Jamaica that were established on the ground. For example, we partnered with World Food Kitchen, we partnered with GEM, we partnered with Food for the Poor, and so on, because they were on the ground. So we were able to deliver immediate in terms of cash to support people who were on the ground. Of course, we're also looking at longer term ways in which we can assist, because we know that it's going to be a process to rebuild after the initial relief efforts. So to answer your question, yes, we are practicing corporate social responsibility, both on an individual basis and on a collective basis, because it is going to be a long road to recovery, and we are playing our role to ensure that we can try to make as much of a difference as possible. Sure. Yes, sir. Good morning.
Blessings, everyone. Want to commend the team, right, for such a good job from 2018 coming up to 2026. We've been following the company funds thus from the inception, right? 2018, raising funds from the private placement, the IPO, APO, and into the preference shares capital raises in the last few years, right? So I have to commend the group for that, because it's not easy for a business like this in such a tough times. From 2018, we faced the pandemic, we faced the 2 hurricanes, and then we faced the inflation crisis. But my question is really little advanced, based on I've been listening a lot what's going on in the private credit business, not only Jamaica, but on a global basis, right? So based on what the CEO of JP Morgan been saying, there's some, based on the practices where some private credit companies been doing internationally, and we know SYGNUS now is basically an international company, based on seeing the report, I see SYGNUS going into the USA right now, right? Based on into the USA. So basically, your guys, we're in the USA right now. So I've been doing some research too. I don't really have the time based on the timing of the group. I've been doing some research using ChatGPT, and the response I've been getting from ChatGPT about the company, I upload so what I do, I just upload the financial statements to it, and I allow the AI interpret. And trust me, what I've been getting from the AI, from ChatGPT, from SYGNUS is very good. So I have to commend the group for that. As I said, the efficiency ratio, it shows right now, SYGNUS is one of the most efficient companies, financial companies in Jamaica. I don't see no financial company in Jamaica right now with an efficiency ratio of 27%, right? And next thing, they realized losses from 2018 till now, 0.2%, that are almost zero. You have to commend the group for that as well. So guys, continue doing the job you're doing and being proactive. But the question, make it short, the question is, SYGNUS, if it is a scare, if it is a systemic risk, or there is a scare or fear in the international markets based on what's going on now, SYGNUS ability, I know the company negotiation to raise international financing from the international partners. So based on what the CEO of JP Morgan is saying, what is happening in the private credit industry within not only America but internationally, it's kind of practices where they are taking too much risk. But based on we see how SYGNUS running the business is totally different from those private credit funds up there. But so what my question is, if there is a systemic risk, how that going to affect SYGNUS to raise capital going forward? Because since we don't reach the threshold that we need to reach in order to attract those international investors, how that going to affect SYGNUS to raise capital going forward? All right, thanks for that very eloquent summarization.
I want to just rephrase for him, Jason, because I think he had a lot to say and a lot of questions. So just rephrase, everybody.
Yeah. So I'm saying thanks for that eloquent expose of how the business operate, as well as how the market operate, right? And I guess the question you're asking is based on what's happening in international private credit markets, based on what's happening in the global economy, region, and Jamaica and all that other countries that we deploy capital, are we seeing any systemic or structural risk that could affect us to raise capital, whether short term, medium term, or long term? And the answer to that question is a mixed bag, right? Because capital markets fluctuate. There are times when it's easy to raise capital, and there are times when it's hard to raise capital. Like right now, it's not so easy to raise capital because, okay, from a Jamaica perspective, you just had Hurricane Melissa, and there may be a lot of uncertainty, right? And so you might have flux in the market. But this is not unusual. Capital raising goes through cycles. And so I think that based on and just speaking about Jamaica first, based on where Jamaica is, we'll get over this. Why? Well, because Jamaica managed its balance sheet exceptionally well over the last decade, and therefore our debt ratio is pretty low. And the thing about having a country or a company with very low debt, if you stumble, you won't fall, right? So you will swing about, but you have enough cushion that you won't fall and break your hand or break your leg, and therefore you can't move. And so I see that capital markets will come back at some point, or the flux that may exist now will certainly come back once people regain confidence in terms of the trajectory of the economic path of Jamaica. And for the rest of the Caribbean, I don't see any structural impediments. I mean, globally, the way I answer the question about globally and us entering other markets is that there are many investors who have zero exposure to Caribbean assets. And because of some of what's going on globally, people are saying, I need to diversify from my concentration. So if I'm concentrated in US, I need to get some diversification. If I'm concentrated in whichever other country, I need to get some diversification. And show me a region that that I don't have any exposure, that I can get some exposure, which would be Caribbean. And that's one point. Second point is the matter of climate risk, right? And what has happened is that before now, investors looked at the Caribbean as nothing. It's not a place I want to invest. But because of Hurricane Melissa in particular, and the fact that it was Category 5, there are many investors who are like, hang on a minute, the Caribbean is very small on a relative global scale. We don't have any money deployed there. Even if we put 0.01% of our capital in the Caribbean, it will do a lot of help, right? And it won't affect us much. And so because of those reasons, and because SYGNUS SCI has been around for 8 years, but SYGNUS, the manager, has been around for a decade, or come June will be around for a decade, that has actually opened certain doors that weren't open before. And so I won't say it has become easier. What I'm saying is that doors that were not open before, the hurricane has actually helped to open those doors, because people are now recognizing how that they should be doing something. So I don't know what else much to say other than to put it that way for you. But thank you very much for how you summarize everything.
So we'll have the first question.
Our first question is from Marva Campbell. Was the first semi-annual from SCI PR received, and should we expect to see it reflected in the next dividend payment?
So, so a first dividend was received, yes. And in terms of whether it will be reflected in the next dividend payment or not, that's something that we'll have to address at the appropriate time.
All right, second question.
Our next question is from Adrian Lawrence. Our 2025 results show a significant jump in net foreign exchange gains. Could management clarify how much of this gain is realized cash versus unrealized paper gains? More importantly, if the USD continues to strengthen or weaken, how should we expect this line item to impact the actual cash available for distribution in 2026?
So, very good question and observation. I think I have a section in the MD&A that actually specifically addresses FX gains. So let me just find that. So on page 24 of the annual report, right, I have a little explanatory paragraph that explains what causes FX gains and losses. So let me start by saying that the answer is it's partial realized gains and partial unrealized gains, but majority of it is unrealized gains. So if you think about what SCI is doing, right? So SCI effectively, by and large, borrows in Jamaican dollars, right? And then we are investing in US dollars. So on the balance sheet, you have a J dollar liability, and therefore, if the exchange rate depreciates, it means that we get a benefit from that. So that's primarily what's driving the gain or loss, as the case may be. So obviously, because the currency was depreciating, we book a big, a sizable gain, and as the currency moves up and down, that number will move up and down. Now there are transactions that we have to execute from time to time, because if we borrow in J, we have to convert it to USD to actually invest, right? And so you can have crystallization or realize gain or loss on those positions when we do those FX conversions. And likewise, there are circumstances in which we have we do have those same J dollar liabilities, right? When we have to pay the coupon on those debt or the interest on those debt, then because majority of our assets are in USD, then we obviously have to do a FX transaction the other way to get the J dollar to pay the interest. And so there can be gains and losses there. But the majority of the gain or loss that you're seeing is paper, quote unquote, gain. In terms of how it affects liquidity, it doesn't really affect our liquidity that much. I mean, if you look back 2018, 2019, 2020, maybe even 2021, we used to be in a position where we used to have a lot of Jamaican dollar investments. So on the asset side of the balance sheet, we used to have Jamaican dollar assets, maybe 20% of the portfolio or so. And during those times, if you look at those audited financials, we would have actually got hit on USD depreciation. So same depreciation, and we used to suffer losses. And we kind of, wheel and come again, so to speak. And basically structure the portfolios in the way that you're seeing it now, such that if the currency depreciates or it moves a little bit, then as a US dollar investor, we should benefit from that. And by taking on Jamaican dollar liabilities, we benefit even more. So I would say it doesn't affect our liquidity position one way or the other. And it doesn't affect, the FX doesn't really affect us. It's a normal part of business. It's a normal part of how we do business. But I just wanted to explain that we strategically reposition the balance sheet to ensure that it reflects what we really do, because we're not in the business of running an FX trading business, right?
Okay, thanks. We have another Q&A session coming up, so I'm going to hand back to the chairman to take us through the resolutions, and we will have another section that we will invite you to table your question then. Thank you very much, everyone.
All right, thank you very much, David and Jason. I like the enthusiasm and the fact that we want to hear more about SCI and its operations and what the future holds for SCI, among other things. All right, so there being no further questions, I now formally propose Resolution 1, that the audited financial statements of the company for the year ended 30 June 2025 and the reports thereon of the auditors and the directors as circulated with the notice convening the meeting be and are hereby adopted. So that's a resolution that we need to be voted on now. Of course, the shareholders who are attending virtually, the instructions were already given. You will have 2 minutes to cast your votes. And for those attending in person, you will show your hands for or against the vote. So those who are for the resolution, can we have a show of hands?
We'll now take the votes online.
So while we take the vote, maybe I should have a little quiz, for the shareholders, and I'm sure you all know the answer, right? How many times per year does SCI pay dividends? 2 times per year? Okay. Excellent. Excellent, excellent. I know you'd know that. I think we pride ourselves by being one of the companies on the stock exchange that pays the largest amount of dividends to its shareholders. Do you agree? You don't think so? But you're saying you need a little top up. Huh? Yes. The projections are that we'll do better this year than we did last year. Puerto Rico included, okay? And while we tally again, do we know who is the CEO for SCI? Who is our CEO? Our CEO is online and not here in person. Huh? Nobody knows? Huh? Mr. Barris Gray. And I'll give you a very, very simple one. Does anyone know who our auditors are? Who's our auditors? KPMG, yes.
Sure, we have 49 votes in favor. There are no votes against.
Okay. So there are 49 votes in favor of the resolution. And so the resolution is duly carried. Thank you very much, shareholders, for your participation. All right, and so we're moving right along with the other resolutions that were included in the notice. And the second resolution is that relating to the declaration of dividends. That the interim dividends per stock units of US $0.00276 paid in April 2025 and US $0.02 paid in August, that's dividends per stock unit, be treated on the recommendation of the directors as a final dividend for the year ended 30 June 2025. So we're asking you to vote on this resolution that the two dividend payments so far be treated as final dividends for the previous year or the year under consideration. And so the voting is now open. By show of hands for those who are present and those who are on the e-platform for you to vote. Those in favor?
We'll now take the votes online.
Let's say that he wants to object, then and will note that he's voted no.
Yes. All right, so you can make your comments in the next Q&A section as to the reason why you voted no. And is there any abstention? Anybody abstaining? And there's one abstention. Andrew?
Taking the votes online.
Okay.
Chair, there are 52 votes in favor and 2 against.
Okay. That being said, the motion has carried. Okay? All right. So moving right along to the other resolution, resolution number 3, election of directors. Articles 149 and 150 of the company's amended and restated Articles of Association provide that 1/3 of the board, other than the managing director, if one is appointed, and directors appointed by the holder of the special share, or if the number of members on the board is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors to retire every year shall be those who have been longest in office. The directors retiring under these articles are Mr. Damian Keith Chin and Mr. Peter St. George Thompson, who, being eligible, offer themselves for re-election. Hence, the proposed resolutions are as follows. That Mr. Damian Keith Chin, who retires by rotation in accordance with Article 149 and 150 of the company's amended and restated Articles of Association, and who, being eligible, offers himself for re-election as a director of the company, be re-elected as a director of the company. And also that Mr. Peter St. George Thompson, who retires by rotation in accordance with Article 149 and 150 of the company's amended Articles of Association, and who being eligible offers himself for election as a director of the company, be hereby re-elected as a director of the company.
Chair, we should
Andrew,
take
give me some
the
guidance
vote.
here.
We should
yes.
take the vote separately, Chair,
Right.
in respect of each.
Right.
Chair.
So we'll vote on Mr. Damian Keith Chin first, and then we vote on Peter Thompson secondly. So those in favor of Mr. Damian Keith Chin being re-elected, can I see the show of hands? Those who are for?
We'll now take the votes online.
Do you know your director? Can anyone tell me whether Mr. Damian Chin is physically present or is online? He's physically present.
Chair, the tally is 56 votes in favor and 2 against.
Okay. That being said, the motion carries. So Mr. Damian Keith Chin has been re-elected to serve as a director of the board. We'll now take a vote for Mr. Peter St. George Thompson. Can we see the show of hands for those
By show of hands, please.
for the re-election of Mr. Peter Thompson?
And those against? We'll now take the votes online.
Abstentions? Okay.
Chair, there are 58 votes in favor, 1 against. With respect to the vote from Director Damian Chin, I just want to clarify. Or the dividend. There were 2 abstentions.
There are also 2 abstentions. Okay. Okay, that being said, the motion carried, and so Mr. Peter George Thompson has been re-elected to the board. Congratulations to both Peter and Damian. Thank you very much, shareholders. All right, so I move to resolution number 4, which is director's remuneration. And it reads that the amount shown in the audited financial statements of the company for the financial year ended 30 June 2025 as remuneration for the directors for their services be and is hereby approved. So the resolution is on the floor. Those in favor?
By show of hands, please. And those against? We'll now take the votes online.
Abstentions, anybody? So shareholders, Jason, you'll have to provide this answer. What year did SCI list on the Jamaica Stock Exchange? Huh? 2018? Jason, you have to verify. Huh? 2001. That's when you bought your shares, right? 2018 is the answer. Excellent, excellent. Because somebody did mention that since 2018 to now, they're very happy with the operations of the company and the level of dividends that we've been paying. So I'm very happy that we have some very happy campers, very happy shareholders out there who are very happy with the dividend payment. And the encouragement is that you should go out and maybe buy some more shares, support the stock exchange, buy some more shares of the company. It's a good investment. Get your friends and family to come in, And from time to time, we have other product offering, and Jason will probably tell you about all those we have. From time to time, we have those. Preference shares issues, et cetera, that you can participate in as a shareholder.
Chair, we have 57 votes in favor, 1 against, and no declared abstentions.
That being said, the motion carried, and so the director's remuneration is approved accordingly. And then we have a final resolution before we go to the next segment of question and answers. And the final resolution relates to the appointment of auditors. And the resolution reads as follows: that KPMG, Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next AGM at a remuneration to be agreed by the directors of the company. And so the motion is on the floor. Can I have the voting? Those for?
And those against? And those abstaining? We'll now take the votes online. Chair, there are 56 votes in favor, 1 against, no declared abstentions.
Okay. Having said that, the motion to reappoint KPMG as our auditors until the next AGM has carried. Okay. Thank you very much again, shareholders. So having approved the last resolution, resolution number 5, we now move to the second segment of the question and answer period, and I ask David to just come back and just to moderate that section, 15 minutes, okay?
Thank you, Chair. I believe that it would only be fair to start with the young lady who had a question before we concluded prayer.
Young enough. Good afternoon. Nicola Borough, shareholder. I'm seeking some clarification. In your corporate structure on page 9, you mention the acquisitions of AFL in February 22, acquired more in June 23, and you are now at 95.58%. And in reading through some of the texts in your MDA, I'm hearing the highest, more than 50% increase in total investment income, which eclipsed US 115 million. And there's a lot of talk about this AFL, I don't know if you can call it, let me call it entity. And is that the driving force besides, there was a restructuring in 2022 and there are subsequent efficiencies, but there is also robust, get a lot of hyperboles here almost, robust capital deployment and a major strategic reorganization that has resulted in a more efficient and optimized private credit business. Is that the driving force for the results, or is it a combination of something else? And are we to expect this going forward? Or this may have been a one-off blip with the whole transition in acquiring this entity. Let me put it that way, because not everything flows through to, I'm trying to find the right words. Not everything flows through consolidated to SYGNUS Credit Investments. If I got it right.
Jason to take that.
Yeah. So good observation again. I like tough questions, right? Give me a chance to explain. So the last part of your question is for the financial year ended 2025. Yes, Accrescent was the driving force. SCI itself made some money, but Accrescent was the driving force. That's number one. And number two, part of your question is this a one-off, or should we expect this going forward? And the answer to that, can activate my slide again, please? The answer to that is you can expect Accrescent, ceteris paribus, to continue to drive, to continue to be a substantial part of what SCI is doing in terms of contribution to the bottom line. So SCI itself will continue to expand. But if you were to say over the next 3, 4, 5 years, Accrescent, I would expect to perhaps eclipse SCI completely. Why? So this chart is showing you Accrescent's net profit on its own, right? And you can see that subsequent to the reorganization, the net profit has jumped substantially, and that's due to the exceptional work that Dr. Johnson here and the team in Puerto Rico would have coordinated to reorganize the company. So, Accrescent has a massive moat in front of it. It's a $100 billion US economy. It has $100 million US in revolving credit line. And for context, SCI has about $8 million US in revolving credit line. And Accrescent can deploy, when it's fully optimized, I suspect that Accrescent can deploy between 100 to 200 million US in private credit investments once it gets to where we want to get it to per year, very easily, because it's a big giant economy. And if you add up all the Caribbean economies that SCI is deploying capital in, except Puerto Rico, that's like 60 million US, 60 billion US in GDP. So it's literally twice. You're talking about an economy that's twice what SCI is, right? And then if you add on top of that, if we see other opportunities to forge additional partnerships, or perhaps at the appropriate time do some acquisition or enter into some type of joint venture, then obviously that just causes Accrescent to become even bigger than it already is. So what I'm saying is that it's going to be a substantial part of the fortunes of SCI going forward. And of course, not just in word, but in deed, because the dividend flows that need to come back from those level of profitability coming back up to SCI, right? And so that's what we expect in a steady state to happen and I go forward. So final answer is 1, Accrescent was a substantial driver of the growth in 2025. We expect Accrescent to continue to be a substantial driver of growth going forward as well. But of course, SCI will also grow. And 2, no, it's not a one-off. It will continue ad infinitum, we hope.
Thank you.
And then we'll come back in the audience.
Okay, and I do believe after those online questions, the gentleman in the green shirt was first in line when I deferred to the lady for her question. So online?
This question is from Roger Vassell. Do you anticipate that dividends will return to 5% APO price this quarter? And in the medium term, 3 to 5 years, what type of dividends should shareholders expect?
I'll invite Jason to address those 2 questions.
So let me answer the last part of the question first. Over the medium term, absolutely, yes, I expect the dividends to be substantially higher than where they are. For short term, I can't answer that question at the moment.
The next question is from Andrew Bell. What have been the primary financing needs of the borrowers in the Puerto Rico entity that facilitates a high rate of return? Is this return rate sustainable?
Very good question. I was wondering when somebody was going to ask me that question. So the rate of return that we quoted, which is the 17.7% or 17.5%, isn't actually the rate that we are quote unquote investing at, right? So think of it this way. SCI invested 22.5 million US, and subsequent to that would have invested a further 2 million and then a further, I guess, 1.5 million or 2 million. I don't remember exact numbers. So that money that SCI invested in the company, when you look at the level of profit that the company has generated on the capital that SCI has deployed, that is where the 17.7% is coming from. And not that we are extracting 17.7% or 20% are taking very high risk investments in Puerto Rico. So I want to make that distinction very, very clear, because people can misconstrue. So in other words, it's like I take my money and I invest in a company, and the level of profitability of the company is such that when I calculate how much profit the company is making, which is my money that I've invested, on my capital, that's the return I'm getting. But so just to base the point even further, the rate at which and the Puerto Rico business, by the way, is an actual lending business, has a lending license, right? Is, anywhere between 11-13% on average. Sometimes there are transactions that generate returns of 15-16%. But it's because, I guess, Dr. Johnson was very good at negotiating a very good price to buy the shares of Accrescent at, and then because he was able to negotiate a good price to buy the shares at, then the net profit that the company is generating a very high return based on the price that he bought the shares at. If we negotiate to buy the shares of Accrescent at. So that's why the return is high. And on a go forward basis, we feel that based on the level of profitability, which the company is nowhere near to its optimal level of profitability at the moment. And as we get towards that level, then we expect, obviously, continuation of growth. I think I've answered the question, right?
Any more questions online?
So Anne-Marie Thomas. On the September earnings call, it was mentioned that the agreement with WBC was paused and that the company is pursuing a partnership with a multilateral institution to move the funding strategy forward. Could you provide an update on the status of those discussions, particularly in the context of securing a revolving credit facility with a floating rate structure, which was previously described as a potential game changer for the business?
Yes.
All right. Today is a day of tough questions. Very good. All right. So thanks for that question. I kind of hinted at it, right? So, you mentioned WBC, and what I can say is that that transaction is being consummated, and within a very short space of time, the appropriate announcement will come. So that's WBC. Yeah, so I don't want to say any more than that. So last time I said it was paused, so it has been unpaused. Was there a second part to the question other than WBC? And you so I mentioned earlier that we are reviewing a term sheet from an international partner. So that's going very good. And then we have a third international partner that we started discussions with in December, and hopefully they'll come on board as well. So what I said in my presentation was that I'd come to many AGMs and said that we are pursuing these type of transactions, and it's very difficult to get over the line because of many things. You know, size of the company is very small. People want to normally fund companies that have $1 billion US and more. We are nowhere near there, which is why we want to get to $1 billion. And then we are in the Caribbean, and sometimes international financiers don't look at Caribbean as an investable space. So after 2 years of due diligence, and as I said before, Hurricane Melissa kind of opened the doors or the eyes or whatever it is to then fast track some of these things. So we are happy for that, which aligns with one of the questions that you asked about, is ability to raise capital, are there systemic risks that can affect our ability to raise capital? And I'm saying some of those risks that emanated actually is helping us, because the international market is realizing that they have neglected the Caribbean region. And obviously, because we have been around 10 years, well, SCA has been around 8 years, but we as a manager have been around a decade come June, that have created track record, then that has kind of gotten us over the hump. I hope I've answered the question.
Thank you. And the final question online is from Marlon O'Neill. He's asking, does all Accrescent's dividend flow to SYGNUS?
So all the dividends that Accrescent pays, it's paying to the shareholders of Accrescent. And SCI owns, call it 96% of Accrescent. So the 4% shareholders, they would also get a portion of that dividend.
All right, so thank you very much for the online questions. We now can go to some questions. Gentleman in the green shirt, please remember to give us your name and go ahead with your question, sir.
Thank you. Good afternoon. My name is Lessers Mackenzie, shareholder. A two-part. The first is a clarification. The resolution for the dividend referred to both interim dividends being approved as final for the financial year ended June 2025. One of those dividends was paid in October, which is your smallest dividend that you have paid, as I recall on record. I am comparing that with what was said by Jason earlier on in his report, that the financial year paid its highest dividend. And if the lower one in October is included as a part of the financial year, I couldn't see how that year could have been the highest dividend. So I need a bit of clarification on that, one. And the second question is really one of curiosity from my part. If in this, say, the dividend that is being approved to be final, if there was a total vote against, what would be the protocol going forward? Thank you.
Well, I would leave the second question to the expert at the back, Serlin. The first question is that the dividend that we are referencing, given that this is an annual general meeting considering the financial statements for the period ended June 2025, would have, to my mind, reflected. So what I was discussing were the dividends that were paid during the financial year based on the annual report for the period ended June 2025, right? Which was actually 3.2 million because we paid 1.61 and then 1.62 or something like that. So that's the dividends that we are reflecting. I think the resolution here reflect the dividends that were paid on the financial results, which would be one dividend in April and then one dividend in October, which you're right, would be 1.6 and 1. But that 1 million wasn't the smallest dividend in history. The smallest dividend in history was actually 438,000 in 2018. Just for clarity.
We have a couple more minutes. Any more questions?
Yeah. A dividend, me really talk about.
Sorry. Just hold a second, please. Sorry. There was a second part of the question with respect to, Serlin, could you take that?
That was in relation to whether or not, if the shareholders had voted against the interim dividend being final. Well, that matter would have to go back to the directors, because based on the assessment, the directors would have determined that the amounts of, I think, 272 and 176, they would have assessed the profitability of the company and would have determined that that is what they think the company is able to pay without, in any way impinging on the financial viability. So we'd now have to take that back to the directors for them to determine how they want to treat with that. Yes.
Microphone, sure.
Yes.
Mr. Chairman, I've made a talk about the dividends. Hear me out a little bit. As a minority shareholder, the Jamaica dollar value less than 3 cents to the US. Me not earn US dollars, Mr. Chairman. But I first use my money and buy US to buy SYGNUS and credit. The reason why I love the company, so because we still do very good. It's a good company. So I can't get in it. Turn to page 97, please. Fair value and financial instrument. Page 97, note 25C. You there, Mr. Chairman? The company. Fair financial assessment. meant some at fair value. Preference shares. Give a little explanation on it. 2022. Dear Mr. Chairman. Page 97, note 25, C. Page 97, note 25, C.
Yeah.
All right, the financial assets.
Financial assets
Yeah,
measured at fair value, preference shares.
Yeah, yeah.
And it says for 2025, 26,331,339.
All right, well, on look a bit, Mr. Chairman. Cash and cash equivalent. Certificate of deposit. Interest receivables. Other receivables. Tell me, Mr. Chairman, 1,719,000. Just a little bit. Maybe go through it. Interest of receivable of 6,707,000. Explain to the shareholders what make up this other receivables. Yeah, the line item and down. Explain a little bit on it, please.
So what you want to know is on the other receivables where it says 256,792, what is it that makes that up? Or you want the one that says interest receivable 6,707,004?
The one with
the bigger one or the smaller one?
The one with 77 million, short-term investment.
Oh, okay. So you want short-term investment notes of 77 million?
Yeah, yeah.
Okay. So very simply, those are actually investments that SCI makes that are classified. So when we are doing debt investments, right? Yeah. And the debt investments can be classified as investments that mature between 0 days and 1 year, and then investment that mature between 1 year and 5 years, and then above 5 years. So the 0 to 12 months or the 0 to 1 year, they call those short term, and the ones between 1 year and 5 years, call those medium term. So we have 77 million invested in short term investment.
Mr. Chairman, and the others is a due from related party. It is the light item, short term and some come under others. With 77 million, everything come under others.
So where are you? You have
you have due from related parties. I have short-term investment. The whole light meditate on investment. Everything come under others.
Jason, can you just explain the entire makeup of that segment so you understand what makes up that segment of the financial?
Right.
Yes.
So other receivables are a line item by itself. Due from related parties is a line item by itself. And short-term investment notes is a line item by itself. They don't have anything to do with each other.
Okay. All right. The next one. You can turn to page. Hold on. Come here, look at me, Sanchima. Wait. Page 76. Note 6. Yeah. Credit certificate of deposit. All right. The company, this is company and the group. Period of expense. Client receivables. Other receivables. Gain of client receivables is the following. Now explain to the shareholders of 61 to 90 days, over 360 days.
Okay.
What made up this others as 51,236,000 of the group 2025 and 2026, please?
No, that's actually $51,236.
Yeah. Explain to me.
Right. So basically, receivables reflect monies that are owed to SCI, right? So if SCI invests $100 and it should get $10 in interest every quarter, then until it gets that $10 in interest, it's carried as a interest receivable. If we did a transaction and other than the interest receivable, the party who is supposed to pay us owe us some money is carried as a receivable until that company or party actually repay us the money. So that's what is classified as other receivables are simple items that are owed to the company that aren't really interest receivable, meaning it's not an investment that we did and we expect to get money from it, which are from time to time, for example, from time to time, we do transactions of various types, and the monies that we are supposed to get back, we carry it as a receivable. And then what we are doing is we are measuring how many days gone since the receivable has been outstanding. And it's important to measure that. That's called aging of your receivables. So basically, you normally don't want to have a lot of receivables. That's, for example, more than 365 days outstanding. So we have a small amount of other receivables because this is 51,000 and the balance sheet of SCI is 221 million. So it's like 0.00 something percent. So it's very small. So it's actually a good number.
Yeah. Mr. Chairman, look. Gains, last one. August 13 to October 2028. 100% to 5.30 per annum. Give a look at explanation on the top part.
Which page is that?
The same page, man. Certificate of deposit. Top part, 6.
Okay. Okay, so this is just saying that we had $449,405 in short-term deposits, which are held in bank accounts, which is compared at the end of the financial year compared to $15,168 the previous year. So we had a lot more investment on short-term deposits, which means that maybe it's because we had excess cash. We simply invest in the cash in a safe investment that generates a small amount of return until we actually take that money and redeploy it into a private credit investment. Yeah, it fluctuates. Yeah, you're welcome.
So that
we have a question online.
One more question online, and that will be the final question. And then after the question, I will hand back to the chairman. So go ahead with the last question.
Okay, Andrew Bell is asking, what risks keep the board and investment manager up at night? And what risk are they both comfortable retaining?
So, very simply, the risk that keeps us up at night, and if we fall asleep during the day, keep it up as well, is monitoring the health of the portfolio companies. So, you can have like general macro risks that are occurring, all right, and you have to navigate your way through that, but effectively it's really the risk of portfolio companies. So, we would have mentioned that we had Melissa, and quite a number of portfolio companies need assistance. And, we would have started providing assistance to many of them. And we have to also just monitor the health of those financial companies and very early ensure that we put the appropriate strategies in place to help those companies, similar to what we would have had to do when we were in COVID, which was a far worse situation because, you don't know whether the world was going to end or not. So I'm sure we'll get through this period. We also have some companies that are in stage 2, meaning, so if you think about how we classify a risk, you have stage 1, which everything is going according to plan. Stage 2, we see enhanced risk, or we have had to restructure the terms of our investment to allow the company to breathe, or allow the company more room to achieve their corporate objectives, as well as allow us to get back our money. And then stage 3 is when company is in default, right? So obviously, all the companies that are in stage 2, we have to ensure that we are monitoring and managing and working with those CEOs and CFOs of those companies to ensure that they get to the promised land so that we can get to the promised land. So effectively, we are a credit business, and we therefore have to just simply watch credit risk. And credit risk, in short, is really about ability to repay and willingness to repay. In some instances, people have ability and unwilling, but in most instances, it's really ability to repay. So we have to absolutely manage that, and we have an exceptional risk management framework, exceptional risk management team members, and we have within the business different levels of risk management, right? You have first line of defense, second line of defense, third line of defense. So risk is our business. Once you're in the credit business, it's all about risk. Is, you know, cash flow, is how do you get back your money, but also how do we be flexible to help businesses to survive and grow. Because at the same time, we also have companies now that are doing IPOs, etc., which they would never have been able to get to a stage where they can do an IPO if SYGNUS Credit Investment didn't exist to help them and provide that capital when they needed it most. So it's a balancing act, but absolutely just focus on those risks from the portfolio companies.
So thank you very much. That was the final question. Just want to say thank you very much to Mr. Jason Morris for the very substantial way in which he dealt with all of the questions. And thank you, of course, to the shareholders for all of your insightful questions about your company. So with that said, I'll move straight into the vote of thanks, after which I will invite the chairman to come and give the closing remarks. So it is my distinct pleasure to move the vote of thanks on behalf of SYGNUS Credit Investments and by extension, the entire SYGNUS Group. Firstly, thank you to everyone who took the time to join us this morning into the afternoon, whether in person here at the AC Marriott Hotel or virtually. We sincerely appreciate your presence. It is worth repeating that we have and never will take you for granted and give you the continued assurance of our endless quest to grow your belief in SCI, to preserve your shareholder value, deliver great results, and of course, pay dividends. SYGNUS Credit Investments continues to be your company, and we assure you that the entire team is steadfast and laser focused in their efforts to continue delivering these robust performances and results. Thank you to all the shareholders for considering and passing the 5 resolutions this morning. To the Chairman and Board of Directors of SCI, Mr. Linville Freeman, and to the President and CEO of the SYGNUS Group, who's online, Mr. Beres Gray, thank you both for your continued robust leadership in guiding the company to achieve these annual results. We also express our gratitude to the innovative and industrious investment banking and investment management teams led by Mr. Gregory Samuels and Mr. Jason Morris, respectively, whose leadership and guidance have driven SCI to this outstanding performance, supported, of course, by the various business units within SYGNUS. Most notable amongst those internal SYGNUS teams that collaborate on a daily basis to deliver these results are the investment banking team, the investment management team, the finance team, and the risk management team. And let me single out Justine, Stephen, Monique, and Yashi as the yeomen of these teams. Thanks also to our auditors, KPMG, for their continued dedication and professionalism to audit the SCI accounts. As you're all aware, it takes a collaborative effort to successfully stage events of this nature, and so we now recognize those directly and indirectly involved in bringing this to our reality. First, we extend our thanks to our Vice President and Head of Legal and Compliance, Ms. Serlin Hudson, her trusted deputy, Mr. Andrew Foreman, and their team, who spent many hours in planning and organizing this annual general meeting. We are here today enjoying the harvest of their tireless labor to bring this meeting to fruition. Thank you also to the formidable SYGNUS marketing team led by Mrs. Elizabeth James and Mrs. Renee Rickards, who invested so much thoughtfulness and energy into creating and leading this production. Allow me to single out their first-class team of innovative practitioners and production specialists who built on their foundation. The production team includes the Appfinity team, who supports with the production, audio, and videography coverage, as well as the online platform that facilitated your voting today. Agile, our long-standing and highly trusted IT partner. Reasons and Seasons for the decor you've seen. Jose, our videographer, for the media footage that he always shares on multiple platforms. And of course, the LH Multimedia for their consistently outstanding photography. The team also includes the Simply Dandy team for the design of the agenda and the annual report, written by our investment management team. As always, the report is intuitive and makes for easy reading. We are also grateful to the media for the positive coverage the report and these SCI results have received. We would like to express our appreciation to the management and staff at the AC Marriott Hotel for their impeccable hosting and support for this function. To all of the other unsung heroes behind the scenes, who I may not have named, we acknowledge and thank you. Finally, thank you all for attending this annual general meeting of your company, SYGNUS Credit Investments, and we look forward to seeing you next year. We wish God's abundant blessings upon you, and may you all have a successful and productive 2026. Thank you, and I invite the chairman to give a concluding remarks to the AGM.
All right, thank you, David. You have been a good audience. Thank you very much for your participation and all that transpired here today. So with that vote of thanks, it brings us to the end of the formal part of the meeting. And I therefore declare the meeting closed. Thank you for your attendance, interest, and we look forward to your continued support. And if I didn't say it before, Happy New Year, and may 2026 be the best year for everyone in this room, okay? Just by way of housekeeping, there may be shareholders who do not have your email and record. So we want you to check, we want to make sure, because while I was here, I got a call from a shareholder who wasn't aware of the AGM here today because he doesn't have an email and record. So we want to make sure that you all have proper emails and record. And the second thing, we want to stop issuing checks. So we're encouraging everybody to get registered with the JCSD so they can actually have direct deposits to your accounts. Because, you know, check now is an olden day thing now as we move forward into the digital world. Okay? And so those are my two announcements. Thank you again. Thank you, everyone, for being here today, and my best wishes. Thank you.